Hello folks, this is the MMXM Maven. Today I'm going to share a strategy which is very close to my heart, okay? Which is called MMXM, okay? This is the strategy which helped me to make 6.2k today, okay? MMXM basically stands for Market Maker Buy Model or Market Maker Sell Model. This is wholly based on your smart money theory, okay? So if there are smart money people, there are people who are like who are the you can say the con men who control the market, okay? This is everything is based on this, okay? Before I go into this video, this is not financial advice. I'm not a SEBI registered. Me telling you anything should not make you buy or sell a particular stock, futures, or options. Please do your own research, okay? And let's get into this video, and this is only for your entertainment purposes only. So what's MMXM, which I've already told you, okay? So let's say there's a smart money or operator, okay? If you know, these days the 80% of the market is already controlled by algos. Algos are basically algorithms which are running at hyper speed, like hyper speeds. Okay, so they are executing buy and sell order at a very the time cannot be grasped by a human eye. Even if you blink, right, you can I think see only 1/4 of a second or maybe 0.5 seconds. But then algo can place I think 100 of a second. Okay, so by the time you actually react, there will be more than I don't know how much you just comprehend in that. Okay, so coming to this thing, the operator. Okay, the operator is not like you and me. Okay, he has some big pockets. Okay, let's say 100k crores. Okay, so for him to buy one stock and not and going unnoticed, okay, is a very difficult game. Okay, let's say he buys a stock, let's say Tata Motors, and for around now let's say he wants to buy 100 crores. Okay, 100k crores, matlab 100,000 crores. Okay, if he tries to buy it in one day, right, everyone will catch the attention of that, and basically they'll also start buying. Again, he doesn't want it, because if everyone starts buying, okay, who is the one who will sell? Okay, this guy will always require counter turn liquidity. I mean, if your average Joe, which is sitting at your house, right, you can buy HDFC Bank or Tata Motors at your leisure. Okay, you can just buy or sell with one click. Okay, but for this guy, for him to place an order, someone should be selling that amount of shares. Okay, and that selling doesn't come as a simply. Okay, there's usually a news and all, like a bad news. Okay, so again, this news and all are manipulated. Okay, these people know they know always these things which are going to happen in the far future. Okay, and they will at a particular time, at a particular this thing, a month, at a particular this thing year, will always release a bad news. Okay, this bad news will be seen by retail people, the not so smart money people who are actually hedge funds, like maybe HDFC or LIC. They're still not smart. Okay, there are more smarter people than this, which will never come to know who they are. They are hiding in the shadows. These people will start selling. That's obvious, right? If they think it's a bad news, they'll start selling. Now that's the mistake comes. Your long-term fundamentals are still strong. The company is still strong, but now bad news has come. Has come. Okay, so technically it is actually a buying opportunity. But again, your human psychology is like, okay, it's going to fall now, so they sell. And when these people sell, these people buy. Okay, that's always how it works. They always provide a counter to liquidity. I mean, if you look at Corona crash, everyone thought it's going to be the end of the world, bro. But again, when the crash was happening, if you opened a market at that time, right, LTP was, let's say, around 10,000. What is LTP? The last traded price, right? So that means at 10,000, someone bought and someone sold. Okay. Now at that time, when I was looking at the market, I was like, okay, who's this guy who sold at 10,000 is a very smart guy. The market is actually going to zero at that time. Very immature, you can say. And I was like, who is this guy buying at 10,000, man? He is bonkers, man. And as you can see, if you give a little hindsight, you know that the guy who bought at 10,000 is in a fantastic profit. Okay, that's how it works. Okay, you have to always be the counter trend liquidity. And the counter trend is something which is opposite usually. Again, the context is very important. Okay, you will not try to do this when the market is fundamentally extremely weak. Okay, then the opposite will arrive. You will do. Matlab, every time a good news comes, you like to sell into that good news. Okay, so this is how market maker works. Okay, the market maker he'll always, okay, let's say he knows that the market will go down, so he'll start selling when the market is going up. Okay, and he'll start buying when the market is going down. That's how it goes. That's how they accumulate their orders. Okay, and let's say they now when the actual news comes, right, automatically everyone will start buying and the price will automatically go up, as you can see. Okay, yeah, so now coming to this thing, this is a market maker sell model. As you can see here, it starts going up. Okay, So in this part of the curve, right, let's say now at this point, let's say some news are supposed to released, okay, to be released. It can be your this thing, fundamental data. It can be some news like FOMC. It can be something interest rates. It can be something like elections also, which is actually coming up, okay. Or it can be something like your some bad news, which will be released at a particular time, okay. Everything is pre-decided. These people at this point will maybe tell some on the news and all, this stock is doing this great, this stock is doing that great, and everyone will start buying. And who is buying? The retail people, the dumb people are basically, you can say the dumb people are we. They'll start buying, and at this point, right, all the news channels everywhere in the world will say this stock is damn bullish, it is going to the moon, 100% returns, buy it now. Guess what? This is where retail people will buy the most, and this is where the smart money will sell the heaviest, okay. They will sell the entire portfolio, okay, as you can say, matlab they will short it, okay. And then the market just starts tanking. The news actually gets released at this point. It's called a smart money reversal, and that's a top tip, okay. That's a tippy top, and the market starts going down, and that's when they start making profit. And whoever had bought into this, they so they had bought here, right, bought. The moment starts going down, right, they can't take the loss and they'll automatically sell. So basically it's like a fuel to the fire. They keep on putting more fuel as it goes down. That's what the market, that's why the as the market goes down more, you're always like a it will go in speed, as you can say, okay. Now this is an example of Tata Motors, okay. Now I think everyone knows that Tata Motors is a very fundamentally sound company. This is where your this thing, retail people, they start seeing the market is going down. This is where they sell, okay. They lose interest in the market, okay. This is where your smart money is buying. This is where they buy the most, okay. As you can see, these are the biggest red bars, as you can see here, at least, okay, in the most recent time. This is where the smart money will buy the most, okay. And they start taking it up up, and that they finally take it up more, okay. If you have seen my previous video, you would have know what is this, okay. You know what is this. This is a monthly fair value gap, okay. It's a bar pattern where the wicks of the third candle and the first candle do not overlap. This gap, as you can see, right, this is a monthly fair value gap. You would have bought into this and then ride the whole this thing rally, as you can see. This I also posted in my Twitter channel, so you can actually go and see there, okay. This is not a pure hindsight data. And coming to today's trade, same thing. We have a 1 hour fair value gap. The funda was that the market is going down. Same thing again, I posted on my Twitter channel. This is not something bragging, this is foresight, okay. Everyone can do hindsight. I think everyone can do hindsight. You can say, oh, this thing happened, but very few people actually can do something in foresight, okay. Again, same thing here. A fair value gap forms. This is where I enter. This is called a market structure shift. This is called a, if you are a technical person, you can also, this is a inverse head and shoulder inverse head and shoulder pattern. Or is it, it's a normal head and shoulder pattern. I mean, not into those trading patterns, but yeah, this is where I enter and this is where I exit, okay. It's a 6 hour trade, okay. As you can see, this, I think you can see, is a market maker sell model. This is where this is the false rally, as you can see, they were selling into this, okay. This is where the shift happens, matlab, this is where they sold the most. This big bar starts going down, keeps going down. This is how market maker works, okay. Now this can also be applied to your stocks. I just showed you one example, that is Tata Motors. I can show you more examples also, okay. Let's say something like Bitcoin, okay. This is, people say this is like a more centralized exchange, okay, centralized currency, okay, but I don't think so. This is also very much manipulated. I mean, if you cannot see this, okay, this is where they take it down. Again, you don't try to bottom fish this, okay. You don't try to buy here, okay. You'll only try to buy here when you see these kind of bars, green bars. This is the returns you get. And let's say even if you're bought here, returns will be around 104%. That's decent. It's decent. If you do not believe this happens on all time frames. As you can see, falls down, goes up. This is the corona crash, okay. So again, in the end, it doesn't hit this level. This will be your actual stop loss. Never does that and just release, okay. If you actually go this, if you actually make this This, oh my god, it's the same thing, bro. It's the same thing, same damn thing. I mean, if you actually go into this, I think I'm very sure there will be a market maker model also. Technically, this is also a market maker model, but it's more on your weekly time frame. And if I am very sure, I think I can see you here also. Okay, so this is usually happens in IPOs and all. If you have seen, if the IPO is really good, right, then the market will just gap up. Okay, listing gains will get and just start falling up. I think one stock I can show you, which is actually very good, Zomato. Okay, a very fundamentally sound company. Same thing here. So they there are IPO listing gains, as you can see. They take the market down. Okay, they take the market down, saying some bad news about Zomato. Those, this is where your retail will start selling. Okay, so you should understand, these people again, they cannot buy in huge quantities. Okay, if they only buy, right, so what is the point? They have to make profit also. They have to buy at a particular time, at a particular this thing, and then sell it. So they have to buy it from someone. They cannot buy it from themselves only, right? So that's the reason they sell it first, then they let it come down, and this is where the retail people will start feeling the pain, and they will sell the most here, the bottom. And this is where the smart money will buy. As you can see, it goes down to go up. Okay, this is, I think, this is how most stocks actually operate. Okay, sometimes there are stocks which are not fundamentally sound. This is where your fundamental analysis comes into picture. Okay, something like a Paytm, which is a shithole company. Okay, it just keeps on going down. As you can see, technically you never got a this thing, good bars, green bars to continue up. It is going down continuously. Okay, here you can say something like a market maker buy sell model only. Here what is happening is they will release some good news for Paytm. Okay, and I don't know which guy will buy into the short term news, but there will be people. Okay, let's say this news comes out that Paytm is making little amount of profit, and then just one news of less, just -2%, that profit starts to take it down, like it starts going down. So this is how the market works. They take it up to take it down. Okay, they take it down to take it up. If you've understood this, I think you've understood at least 50% of the market. That's how the market works. It's also called a Judas swing also. So if you know who's Judas, Judas is about the apostle of Jesus, right? Something called also Judas sheep also. The job of the Judas sheep is actually to lure all the other sheep into the slaughterhouse. So it will happily go to the slaughterhouse, and other sheep will think, okay, this guy looks like he knows something, and they will all follow him. And in the end, everyone will die except the Judas sheep. Same thing. This is the Judas sheep. Everyone goes into this. Who are the people? They're the retail people, and then they get slaughtered. This is the profit 6,200. This is my order book. Okay, as you can see, in the start I had a little problem with bank nifty. I did not want to go into bank nifty. I wanted to trade nifty, and actually if and yeah, so it was a good decision actually. And first this thing I took at 3 hour, and other was at 6 hour. If I had hold on to the whole position, then I think the profit will be around 10K. But again, my job is to make money. I always try to what is that, hold capture profits. Okay, if you're making money, it's always good to always reward yourself. Okay, then to lose everything in the end, and then you will blame yourself. Okay, and yeah, and I'll see you in the next video.